My next guest is also a buyer on weakness and is already picking through the regional banks for opportunity. Sandy Villere is here. He's partner and portfolio manager at Villere Co. You've been busy, Sandy, and looking at the regional banks in particular.
Yeah, it just seems like a kind of the pond we want to fish in. We always like, I guess, great stories with maybe short-term sort of warts on them. It just seems like this is an area where we were underweight. We really don't want to be long financials going into a recession. But now you've already had the KRE down, 36% on the year. It's down 50% off its high practically. So now you're seeing a lot of opportunities with really, really high quality banks trading at less than one-time book value. Just feels like a nice area to start to dust off the file and put some money to work.
We just showed your 5 names. Obviously, these are smaller than the M&Ts, the PNCs of the world. Is that because you wouldn't, get into that market cap size, or because you think they're less attractive?
Yeah, I just think that this is where the opportunity is. The regional banks have about 4 times as much exposure to commercial real estate, as the money center banks. And so they've been overly beaten up, I think, because of that. Certainly seeing anybody with exposure to office, to hit 12.9% as far as vacancies go. So that's an all-time high. But if we can avoid some of those exposures and we can find, a little bit of a diamond in the rough, I just think that's a great opportunity to pull up one of these Webster Financial in New York. I mean, they've got $8 billion in health savings accounts, very sticky, small balances. Just feels to me like something of an opportunity as opposed to not.
Yeah, Eric Rosengren was tweeting something this morning about how he thinks deposit flight might actually be higher at large banks than at smaller ones, which would make some sense if you think that those might be really sophisticated players who are really eager, especially if they're more, commercial clients, to pick up that yield, almost have a fiduciary duty to. Whereas with regional banks, you might get people who go, OK, I know there's an opportunity cost, but I'm not yet, needing to pick up my money and move it there.
Yeah, and we're seeing it with our clients. We at our custodian, we tend to we're buying the money market accounts that are at 4.8%. A lot of people, deposits are certainly leaving banks to go to, higher money market yields. And you're certainly seeing that with, net interest margin should certainly come down as, banks tend to, or people are not going to borrow as much money with higher rates, and they're going to certainly try to put their money away. But at some point, you're left with sort of core deposits that are tied to a lot of these loans. And I think that's where, you could see some stability. The banks we talk to, it feels like the deposits are no longer fleeing, it seems like. So I think there's some stability, and this is a great opportunity to buy when things are really uncertain and things are cheap.
Webster Financial is a New York bank, Pinnacle's in Nashville. You also like the Texas bank, Cullen Frost. We've spoken with the CEO, Independent Bank Prosperity. So you're kind of looking at regions of the economy that are relatively stronger. What about the New York bank, though, Webster?
Yeah, so I think it's again, I don't own it. We're looking at it hard, but I do like the stickiness of their deposits. I do like that they've got not as much commercial exposure, not as much office as you'd see elsewhere. So I think it's one worth taking a look at, and we certainly like that those Texas markets. Prosperity's in Houston. Independent Bank is basically in McKinney, which is just north of Dallas. Also has some exposure to Denver. But if you start looking at those really, really nice regions, and a solid backdrop, you really can pick up sort of a crown jewel of franchises when I'd say there's blood running in the street. It certainly feels that way. And if anybody's got a 2 or 3 year horizon, this is when you want to be buying into sectors like this.
Are you guys waiting? Because I know you think recession could be coming in Q3. Are you waiting for that, for valuations to get even deeper, or are you going to buy them here?
We're gonna be looking in the next month, I would say. We're getting into that seasonally sell in May and go away type of time frame where I think you could see a little more volatility. But if you were to get a bigger sell off because of the debt ceiling, which I think they've raised the ceiling 78 times since 1960, I just feel like it's more of a political situation at this point. I think they're going to get something done. So if you do see sell offs as it relates to that, we could be moving a lot more quickly than waiting a month or 2.
All right, Sandy with the strategy. Thank you so much today. We appreciate it.
Thank you.
Sandy Villere with Villere Co.